Good afternoon, everyone. Welcome to the Daily Rundown video. This is Mike at WIC. Today, we're going to talk about the key to the market, what you should be watching tomorrow, and we'll discuss an action that we took this morning regarding UPS, a new stock that we added to our portfolio. I may sound like a broken record, but the key to the market continues to be the three major indices, the S&P 500, the NASDAQ, and the Dow. We also have not moved today. The Dow slipped about 0.5%, but we're still at that all-time high level. I think we're awaiting the hot inflation number tomorrow. So I think whatever the move is tomorrow, right after that inflation report, will be the direction that the market wants to go next. There may be sellers just awaiting that number to kind of sell the news kind of thing, or buyers waiting for the inflation number to finally be over and start buying. I think tomorrow at 8:30 a.m. will be the deciding moment for the market, and hopefully we break out of this range. We either make new highs or we come down, which I do not have a problem with. If we come down off of here, that will give us an opportunity to buy into some of the stocks that we have high convictions, and we'll talk about that kind of buying that we did today with United Parcel Services. So that's what we should be watching. I also like to discuss something that I wrote in the analysis section of our website this morning. That's about the recent volatility going on with the Reddit stocks, or the Wall Street Bets stocks. They're calling them short squeeze. You see stocks that move up more than 50% a day, for example, CLOV or Wendy's. We don't like this volatility in the stock market. What we want is the calm and the thesis of the bull market to be working, meaning we want the reopening trades to be working. We want the reflation, these bang trades to be working, or if not those, then growth stocks with sound fundamentals. But currently, for the past 2 weeks, nothing has been working, and we think it is because those short squeeze trades, these Reddit trades, have been taking away the momentum in the market. They're sucking the energy and the focus from the broader bull thesis. So we don't like that, and we fear that if this continues to go on, we may correct earlier than we anticipate. The first we meaning the market may correct sooner than at WIC we anticipate. So we wrote before that we're thinking there may be a correction, about a 5 to 10% correction towards the end of August, early September this year. But if this retail trading frenzy continues to go on, we may think that a correction is more imminent towards the early summer, so sometimes at the end of June. Another statistic that is very worrisome to me is that today we hit the year's low on the put to call ratio. So you can search that, but basically what that means is there's a very low puts, the number of puts being purchased, meaning people are very bullish, and actually whenever that turns out to be the case, we are nearer to a correction than people think. So that is not very promising for some of the trades we have going on. So we think the best strategy moving forward is to size our positions accordingly. We are going to try to take some gains. We have been trying to trim some gains. We trimmed some gains earlier in the week in Ford. We trimmed some position in Eli Lilly. So that gave us some cash that we will be able to add positions back when the market does correct. I think our position of trimming Ford that we took on Monday was correct. Ford has, I think it dropped 1% yesterday, dropped 2% today. So we've avoided some of that drop, and we're now looking to add it back. Our profit taking in Lilly, we think is good. Lilly continued to rise today, but we still have a big position. The majority of our position is still left in Lilly. So we're not worried about that. And maybe into tomorrow, we'll try to find some positions to trim. We have enjoyed a big run in Crown Castle, the CCI trade. Crown Castle is benefiting from lower interest rates. That is implied by the 10-year treasury that has been going down. So we think maybe tomorrow and into the next week is an opportunity for us to trim some of the gains in Crown Castle and start putting that gains into the banks. We do think the banks will do well, but the banks have been seeing some selling pressure just because the 10-year treasury yield has been going down. So that's something that's on our mind. Of course, we'll be writing about them as we take actions. And lastly, I want to discuss an action that we took this morning, purchasing shares of UPS. We did not, yesterday I discussed adding UPS, but we think that it was immature to add it before the event. So today, after the event, there was a big sell-off in UPS, and you can read about it in our analysis section, where we provide kind of a very lengthy, detailed summary of what happened during that investor presentation. Basically, it was sell the news event. Some analysts and some investors were kind of disappointed that UPS did not guide up. They're being kind of conservative. So the market was expecting UPS to be more aggressive, which UPS does not have a history of providing aggressive guidance. So we think the conservative guidance that UPS provided was what caused the market to sell. UPS was down 4 or 5% today. We view that as a buying opportunity. If I remember correctly, they're believing that UPS will be able to deliver $14 or to the upside of $14 per share in terms of earnings in 2023. And putting the current market multiple of UPS, forward earnings of 18.5, that's a current market multiple below the S&P average of 20. If we just apply that 18.5 multiple to the earnings per share that UPS will be able to deliver in 2023, that means the stock is heading to 260 next year, and we're buying at 200. So we have some position at 200 here. We don't think the selling has stopped yet, and we actually like it. We're hoping our cost basis will continue to be improved on the selling pressure that UPS is currently facing at this moment. So we'll be alerting you when we buy more shares of UPS. You can read more about our analysis that we recently published in the analysis section of the website. So that's it for today. Remember, big movement tomorrow. You should be watching, should be following. You have to take gains if you have them. Try to reserve some cash to buy stocks that you have strong conviction, and try to improve your cost basis. So that's it from me for today. We'll see you back tomorrow. Thank you.